Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Thursday. The streak continues for now. Another day, another all-time record high in gold today. As Jay Powell's talking again in front of Congress. We have jobless claims numbers. We've got layoff numbers. We've got the big number tomorrow, jobs number tomorrow. And I think that'll be, will we go 5 for 5? I think that'll depend on that jobs number. Anything below 200,000, my guess will be we'll have higher gold prices. If we get these crazy, these jobs have been crazy. If we get a crazy number, then maybe some profit taking. But I don't know. I wouldn't be, with Jay Powell this week, I'm pleasantly surprised that gold continues to perform. Silver's had a great week as well. Let's not forget silver. It's higher again today as well. But Jason, I think everybody's kind of coming to the same conclusion, and it's not just here. Japan today had really bad inflation data. Now all of a sudden, do they have to start raising rates, more than they want to? The ECB kind of copying the Fed and saying, hey, we're in a holding pattern. And then, you throw the elections on top of it and you throw budgets. It is kind of laughable that our wonderful people in Congress, once again, Jason, no urgency there to stop the spending. No urgency whatsoever. And you would have thought even this week, because, the story broke that, hey, we're selling, or we're going $1 trillion in debt every 100 days. You would think that would have maybe gotten the attention of our elected officials. But no such luck. No, let's just keep spending. We'll call it cuts. But really what we're doing is increasing spending, but we're just going to increase it less than we said we were going to.
Yeah, just look at the wars that are going on, or look at all of the social nonsense that's in the media, the LGBTQ, or or let's just look at Trump, and don't worry about the economic side. Just put that aside, and if you start looking, and people are starting to get it, then they'll have to come up with a bigger distraction, and that's what that's what I'm waiting for, Joe. Is that the big distractions come, and that's going to herald the big decline in the markets. Then watch out.
And the New York Community Bank, they just couldn't stay out of the news. Their stock cratered yesterday, got halted after the Moody's super downgrade into junk status. But there's a deal on the table where New York Community Bank, which announced this morning that they lost 7% of their deposits in just a few weeks, just to give you an idea. That was over $6 billion of deposits that they lost in just the last couple of weeks. But yesterday, it really looked like this was a bank that would not survive the weekend. But then they announced a deal yesterday afternoon. They're going to get $1 billion in capital, led by former Trump Treasury Secretary Steve Mnuchin and his Liberty Strategic Capital, to try to keep this. I think this is probably the best case scenario. I don't know how often this will happen, but as far as all of us go, much better that private equity came in. Obviously, they think this bank is worth saving. They didn't have the super high uninsured deposit ratios of some of these other banks. So the vast majority of their deposits was insured. Maybe that was why that they stepped in here. But Mnuchin said, and it was kind of interesting when talking to CNBC this morning, he said that there's the risk around loans with commercial, New York here, the Commercial Bank of New York, they don't anticipate the New York portfolio that they are extensively invested in, the New York office loans. He expected that will not get better. I don't see New York office working out or getting better in the future. But Jason, I'll just say this. We got to make sure all the I's get dotted and all the T's get crossed, because right now, why do I have a funny feeling there's a lot of due diligence going on here, and it appears that maybe they're going to be saved, but if not, if they pull out, if after looking at it he pulls out, then we're probably going to see another bank go under.
Yeah, we'll see. And we talked before the show. I just wonder if they're just trying to get this bank into the weekend, and so the real negotiations could happen when because these big businessmen, they have more than just this one bank to worry about. They probably have a lot of banks to worry about. They got a lot of things they're looking at. So the weekend, it's a working weekend for the big money to see if they can save or alter or change or consolidate this bank into one place. But come Monday, Joe, it could just be done, right?
Right, it could be. Let's hope not, because I think this is the best alternative by far. We'll see how it goes. Patriot Radio News Hour. We'll be back after the break. (800-951-0592) Patriot Radio News Hour. Joe and Jason on this Thursday. A quick look in here. The Dow's up 130. The S&P's up 43. The Nasdaq's up 187. The 10-year note just sitting there at 411. Crude oil off about 75 cents this morning. The dollar is weaker this morning. Gold is higher, 2160 right now. Gold, new high now, 2172. Silver is higher as well today, 2435. And again, I think this is diversification is going to be the key, especially going into the following years, 2024. Listen, right now, hey, we got a lot of all-time highs and a lot of stuff. It's good to have money in. But I don't think that will change the deeper we get into 2024 and beyond. And that's why we've been talking about why refi, for a couple of years now. Just a great place to be, up to 10.25% fixed rates of return, not correlated to the Wall Street at all. Doesn't care. I don't know. Wall Street, listen, the Dow can go up 5,000 points, still 10.25. Dow can go down 5,000 points, still 10.25. The Fed could cut rates in June like the markets want. They could raise in June, which the markets don't want. It's still 10.25%, up to 10.25%. Just depends on the length of time you want to go. If you go 5 years, you get 10.25%. You got to have a minimum of 50,000. That's the hurdle there. You can use an existing IRA. You got money sitting in the bank that you're like, you know what? Hey, I don't like it. I need to lighten up what's in my bank accounts. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YREFI24. And Jason, before we get too into it, the day today we had two big pieces really three. We had Beige Book, we had jobless claims, and we also had planned layoffs. We'll start with jobless claims because this has been one where a lot of people are saying, man, I don't understand. The numbers don't seem to, coincide with what's happening in the marketplace, but they didn't budge. 217,000 jobless claims, first-time jobless claims. That was exactly what it was last week. Continuing claims continues to tick higher, right? We're above that 1.9 million. But then again, the big thing is, hey, what is happening? We're seeing these layoffs. We aren't seeing it in the jobless claims data. But then Challenger, Gray, and Crispus, they have a survey. They go into every state, all 50 states. And every state has different reporting requirements for companies that are going to lay off X amount of people. Let's just say Arizona, as an example, says, hey, if you're going to lay off more than 50 people in Arizona, you need to tell us first, right? So you just can't go into your office today and point to 50 people and say you're fired. Okay, you've got to tell us first, and I guess that way, they can plan so they'll know, okay, well, looks like we're going to have a bunch of unemployment claims coming for this office. Well, Challenger, Gray, and Christmas tracks that. And for the month of February, it hit planned layoffs for the month of February skyrocketed according to Challenger, Gray, and Christmas. They're saying that February was the highest level for this month since 2009. So, Jason, when we look at the layoff announcements, 84,638 planned layoffs. This is probably, when you think about it, probably bigger companies that are going to lay off a lot of people in states. By the way, that was up 3% from January, 9% higher than the same month a year ago, and the highest February since 2009. And I mean, that was kind of the heart of the financial crisis when you think about February of 09. Financial crisis, broke loose beginning late 2007 and really, that first half of 2008. But it's still not showing up in the jobless claim data. So kind of a mixed bag where the government's saying people aren't filing for unemployment, but Challenger, Gray, and Christmas says the businesses are telling us they're laying people off.
Going back to this, to me, it's the people that have more than one job. I think there's just too many people that have more than one job versus the financial crisis 15 years ago, essentially. And when you fire somebody that has a second or even a third job, they can't file a jobless claim. COVID did one thing in 2021. That inflation, after all that printing, made it so that you couldn't get enough people to work at your shop. Restaurants were understaffed. Remember how the delis and some of the grocery stores were closed down? They just didn't have people, right? There just wasn't enough employees. And I think that shocked people just a couple of years ago, employers. And like, look, I got to keep these guys on, even if it's 8 hours a week. I got to keep these guys because then I don't have to go into the hiring process to get them back to 20 hours a week. And so what does that do to the employee that only has 8 hours a week? He goes out and gets another 20-hour-a-week job, gets another job, right? He's out there, driving Uber or whatever. And I think, Joe, that all these numbers are right. There's a lot of firing going on. There's downsizing. I remember I talked about right here in Longmont, Smuckers. Suddenly, production just stops 1 week every month now. Uncrustables in Colorado are no longer being bought so much, right? And because Colorado passed a law that says, hey, we're getting school lunches are for free, and so on top of the inflation, on top of the pressures, Smucker's doesn't want to fire anybody, but they're shutting production down for a week every month. So that's what's happening. So I don't think jobless claims can really see the actual light of what's happening because there's too many multi-job people out there. Let's face it, there's a lot of people that aren't working, and then there's a lot of people that have two or more jobs. We haven't seen that level of that going on ever more than now.
Something else that we need to look at. We've talked about it, but now it is actually showing up. Credit scores. Now, remember after the financial crisis, they decided, okay, well, maybe we shouldn't be so harsh to all these people that don't pay, right? Here you are, you busted your hump to get great credit scores, and then as soon as they're, let's just, everybody, here's a free 50, 100 points, stuff like that. But credit scores, for the first time in over a decade, fell in 2023. Kind of a notable milestone now. They're saying the credit reporting agencies saying that the consumers are falling deeper into debt, higher interest rates, higher prices, weighing on these Americans. Not only was the Fed idiotic, 15 years of zero. Right. Then what did we do? Let's just hand people thousands of dollars. Let's pay them more not to work than to work during COVID. On top of that, let's tell everybody you don't have to pay your student loans. By the way, that's like 50 million people. So that's a lot of people to say, don't pay. And then you told them not to pay for 3 years. Well, guess what they did? Guess what they did? They felt like, hey, I've got more money, right? Hey, I'm going to go spend it. I'm going to go further into debt. All of these people, all they did, Jason, is they got debt somewhere else. And now the agencies are saying, oh, my gosh, people are really now not starting to pay. They're saying that average credit card utilization up 35% from just a year earlier. They're saying that 18% of borrowers had more than 30 days past due or a missed payment against their credit accounts. Jason, just think, that's almost 1 in 5. According to the credit reporting agencies, now 1 in 5 Americans have at least one missed payment on their credit scores, and it's just another sign, right? It's just another sign that things are getting, unfortunately, things are getting worse.
Yeah. It's you couple all that non-payment of school loans with the fact that they were giving out money on top of that, and really kind of fostered that spending habit, didn't it? I got more.
What could go wrong
more.
with that? Right? What could go wrong?
It's so you've got bad behavior. I remember when I bought my house, I was a pizza delivery driver. I was one of those don't give a loan to that guy. Stated income loan. I remember all that, breeding the, bad behavior. And, Joe, one day, when people take the bait when it comes to bad behavior, someone gives you the green light for bad behavior, you end up always paying for it. There's just like that law in Colorado, there's no such thing as a free lunch. There's no such thing as free lunch, but Colorado, I guess they want to tell people there's a free lunch. And it always comes back. It always comes back on you. Maybe you don't see it. Maybe it catches you on the backside. It catches you when you're not looking. But it always gets you, Joe. It always gets you. I hear so many people say, man, I used to have money in the savings account, and I was doing really good a couple of years ago. Now it just seems like I just don't have the same flexibility I used to have. I said, yeah, it's because your groceries are more, your energy bills are higher. Car repairs cost more. All those little minor emergencies cost more.
Right?
Insurance is way more.
Car insurance, right? Health insurance. How about this? And I get it. Everybody's being creative, right? How can I get the money that I need? doctors' offices are now charging administrative fees, right? Hey, the copay and this and that's not enough. The latest now is doctor's office now charging their patients for administrative tax to help offset rising costs. Research says a 7% surge in healthcare costs in 2024. So think about this. Inflation's under control, and yet research is saying, hey, by the way, healthcare costs are going to jump another 7% in 2024, and you're going to now see a doctor charging $300, $400, or $500 just to come in. Jason, this is just really, it said, now obviously not every doctor is going to charge $300, $400, $500, but this is something where again the rhetoric coming out of inflation's getting better. I'm not seeing it, especially in the costs that matter. Because what costs matter? Where you live matters, right? I don't care if you got a mortgage. I don't care if you got an apartment, shelter, energy. And then you start talking the big things like health care and insurance and all these other things. They're all saying that inflation, not only is it not going down, Jason, it's a lot hotter than what they're saying. Probably why gold, every time we turn around, is a new record high. (800-951-0592). Joe and Jason, Patriot Radio News Hour. I'm going to do this. At the beginning of the next segment, we are going to run a Silver Eagle special that is stupid ridiculous. Okay? So be ready. And I'm going to say this now, and I'll say it again. This is coming out of an IRA. It's not even going to be here for at least, I'm going to say 2 weeks. But let's just say it could be sooner, could be later. We just don't have any control. When they ship it, they ship it. We already own it, so it's ours. It's coming. No complaining, no calling. If you're one of those guys that feels I got to call to see where, don't buy this. Okay? I'm just going to tell you that I was looking everywhere, and I was looking at pricing. All of these Silver Eagles are from the late 80s and early 90s. We are going to be so far below anybody, especially for the dates that we're talking about. That's coming up in the next segment. And supplies are going to be limited. This will be hard and fast. We absolutely, positively will not sell any Silver Eagles that above the limit that we're going to set. But that's coming up in the next segment. Before we get there, I mentioned it briefly yesterday. India has now said to the major Persian Gulf suppliers, according to Bloomberg, that they need to start accepting rupees as payment for crude oil. Now, India's got a weird deal where India, they are very controlled with their currency. So the thing that the problem that India has is if you take rupees, right, the only way to get them back, right, you need to spend that much with India in return, right? So if, as an example, let me just make an example. Let's just say you're Saudi Arabia and India buys $10 billion of crude oil from you, and they wanted and you to take rupees. Well, Saudi Arabia, if they don't buy $10 billion worth of stuff from India a month, they have a problem with it, right? They have a hard time getting rid of the rupees. So right now, India, and they're starting, listen, India, this used to be how China was and a lot of these countries. They're starting to open these markets up. But, Jason, they're requiring now or want to require all Persian Gulf suppliers to take 10% payments in rupees, which will allow them, obviously that's a number that all of these countries can probably get behind because they're like, oh yeah, that's fair because we buy that much from you anyway. So, but again, it's another example. This is another nation. And remember what I try to educate you greatly about the importance of crude oil because it's so much money. They're using U.S. dollars right now. That's what India uses. They don't want to use them anymore. And here's another 10% that they won't have to use, right? They already buy a ton of oil from Russia. They don't use dollars for that. Now they're like, hey, we like this. This is better for us. Why? Why is everybody turning away? How about central bank gold buying? Another big month in January. Guess who's buying the gold? Turkey's buying it. China's buying it. India's buying it. Right now you got places like the Czech Republic's buying it. Jason, all these other little countries are starting to buy more gold, and it's just another example of countries saying, you know what? And again, who's to blame for this? Why don't they want the dollar? Who's to blame? Well, they've got the same problem all of these banks have. It's the same problem. God, I bought a 10-year note in 2013 or 2014, and you paid me 0.5%. Now, all of a sudden, I go to let's just say they bought $1 billion. And they're like, how's that $1 billion? What? It buys 30 to 40, maybe in some cases 50% less than when they bought that 10-year note 10 years ago. They're like, this is a bad deal. This isn't working for us. And now they're saying, hey, you know what? Let's just do it in our own currency. Let's do it in anything that isn't dollars, Jason.
Yeah, it's you got so much of the world that's been dealing with dollars for so long that and these pullbacks are pretty scary for anybody dealing with dollars, right, Joe? And so it is happening. It's happening kind of slow, I guess, but in another respect, it's happening kind of fast, and that's the one place you can spend dollars if nobody else will accept them in the world is you can bring them back here. And as I keep talking about inflation, the Fed could print nothing, and if these treasuries are brought here to purchase whatever they can get here, Joe, that's more competition for the things that are out there. But I'll tell you right now, if I was a country that was going to stop dealing in dollars, I might just take those treasuries back here, sell them for whatever I can get for them, and load up on some more gold, right? There's all these other things.
That seems to be what they're doing, right? That definitely seems to be what they're doing. India also saying that the BRICS nations, we are creating a new payment system based on blockchain and digital technology. And again, I think they're letting everybody know, right? Hey, listen, we're going to do it gradually. But yeah, we're going to unwind dollars and we're going to go into this digital. And oh, by the way, we're going to get started now. And my guess is every year, right, we're probably going to get an announcement that, hey, okay, let's go, all right, 10%, now it's 25%, 50%, and then, 10 years from now, they're like, yeah, we don't even use dollars anymore, and that's going to be a huge problem. I mean, this is something where we've entered into this phase now. Remember earlier this week, the banks are all talking about, oh, my gosh, you know what? This central bank gold buying, it's going to last for years. Right, this elevated bank buying is going to last for years. Well, why is it going to last? Why are they saying that? And the answer is simple. They're trying to use less and less dollars. And one of the banks flat out just said, hey, they're starting to question the U.S. Treasury market. That's crazy. And stocks, all-time highs, right? Yeah, those are bubbles. Patriot Radio News Hour, the big silver special. You're not going to want to miss it. That's coming up next. (800-951-0592) Patriot Radio News Hour. Joe and Jason here on this Thursday. And as we said, we've got 75 rolls of Silver Eagles that we have acquired. I want to say 180 of them are 2015s. All the rest of them are 88s to 93s. There's 88, 89, 90, 91, 92, 93. The cheapest we saw, one place had the 2015s. If you bought a roll, it was $38. I don't know. These companies that just want to, all these backdates now charge you a fortune. That's $760. All the coins in the 80s and the 90s, anywhere from the cheapest, mid 40s to low 60s. So think about let's just say $45. That would be $900 a roll. There's some of them are in that $63 range. That's $1,260 a roll. Not today. Not here. $595 a roll. Right now, a regular roll of Silver Eagles from us, we're at $645. But this is huge value. We haven't seen them. I don't know what they look like. I just know the dates. And no bitching, no whining, right? I don't know. I'm anticipating they won't be here next week. I think they may be here the week after, but it may be the week after that. It may be, the end of March until they get here. But this is all about price. $595. That would put silver, that's like silver at $22, maybe even $21.75. Silver's at almost $24.50 right now. So this is a huge opportunity, especially when we talk about the dates and what these dates are selling for everywhere else except for here. Again, we only have 75 rolls. Listen, we got one line open right now. That is it. 800-951-0592. And once we've sold them, Jason, there are no more. You can't get them later. They're going to be back to $645. But again, I just want to caution you. No bitching, no whining, right? When they get here, believe me, we want to get them to you as fast as we humanly possibly can. It's just we don't control it, right? It's going to be coming out of the Delaware Depository, so we're at their mercy. But we own them. We've bought them. They're ours. They're coming. 800-951-0592. Incredible opportunity. U.S. Silver Eagles, all these older dates, $595 right now. If you get the answering machine, you can leave a message, but I suggest you hang up and keep calling, Jason.
So you're going to get 20 ounces of silver per roll.
Yep.
Yeah. Do you know what they look like? Are they toned? We have no guarantee as to what they'll look like, but you're going to get 20 ounces.
You got to remember, these are coming back. These are from the vast majority of them are coming from the 90s and the 80s. So I'm anticipating some toning on the rims and stuff like that, because that's just what happens to silver. But these are they've been sitting in the depository in Delaware. Delaware obviously for a really long time. So it will definitely, my guess anyway, that just would, because that's what happens with these Silver Eagles when they're that old, right? They'll get some of that toning on the rim. That I'm expecting that, but I don't know.
So I think a good value, and since we don't know, you could be getting some frosty white coins. Sometimes these sit in these. The plastic is what really makes the toning, because the plastic they didn't use the best type of plastic. They still don't use a perfect plastic. A little bit of acid or whatever is going to tone the coin, but my guess is the 20 ounces of silver usually keeps the toning at a minimum. So these should be, even if these were all, almost kind of a little bit ugly toned, it doesn't matter. You're getting the weight. You're getting the silver weight for very cheap, Joe. And
that's why we're going to be $5.95 for it, because that's just a great value there. I'll tell you this right now. All lines are full right now. Just stay on hold. We'll get to you in the order that you called. Keep trying if you're trying to get in here, and I'll try to give you an update when during the break if I can. But again, these are the U.S. Silver Eagles. There's 180 2015s. Those are probably going to look really, really nice. And then all the rest of them are late 80s, early 90s, 88, 89, 90, 91, 92, 93 that are going to be coming in from the depository in Delaware. By the way, if you want, of course, a lot of people, hey, that's where I have money in my IRA. If you want to roll over and purchase some gold and silver in your IRA, you can do a precious metals IRA with us. We got a couple of lines open now. A couple of lines just opened up, and you can these IRAs you can store it in Delaware. Now Texas is open, so Texas now we can store there as well. And the great thing about a gold and silver IRA is you can take delivery at any time. Right? You get really nervous. You can just say, you know what? I want delivery of my gold. I want delivery of my silver. So it's kind of a cool way to do it. If you want that information, Arlene is our IRA expert, and she can handle the whole process for you. 800-951-0592. Final segment coming up.
$0592. Joe's on the phones. I don't think these Silver Eagles will last to the last 5 minutes. If you want to get some of these really cheap Silver Eagles, I suggest you get on the phone and get them.
Hey, I jumped on the phone. I was taking orders. Listen, already over half gone. So there are still some left. They're $5.95. Right now, we've got 2 lines open if you want to jump in here. But already over. About 35 was the count I had when I walked in here, and we still got people on the phone. So there are still some left. Get them. Get them. This is an all-out buy here at $5.95, 800-951-0592. Right now, gold's up 5, 21.63. Silver's up 15 cents right now, $24.44 to the ounce. We've got the big jobs number tomorrow. Is this, and jobs numbers, they've been really high. And then they come back later and say, oh, well, you know what, we overcounted, right? Or they take them way down. But with all the layoff announcements from Challenger Gray and Christmas, I think any number below 200,000, there's a good chance that, Jason said it, or Jason told this to me privately on Tuesday. Then he said it on the air yesterday. Hey, we could hit $2,200 gold by tomorrow, depending on what that jobs number looks like. I think that's kind of the thing to look for. But today, it's about silver. I mean, it really, when you think about silver, in general, and how many ounces of silver, I mean, it's almost 89 ounces of silver for 1 ounce of gold. It's so undervalued. We're going to have another silver deficit this year as well. I think it's just a matter of time. Silver's it's got to get above that $25 level, get comfortable, and the second it's comfortable, I think it goes right to 30. And you're buying these for less than that. So one line open on these Silver Eagles, 800-951-0592. But we told you, this is the year of chaos. It's just here. Four straight days in a row of all-time record high gold prices. Yeah. Right?
Record high Monday, record high Tuesday, record high Wednesday, record high Thursday. Silver's been going up every single day. 2,200 gold seems very likely next week at least. And it's not just gold. This is what happens. They pump all this stuff up. Everything goes up. Gold, that's what's good about gold, is when people are throwing money at everything. And we're talking big players trying to put big amounts of money into things. When everything goes up, but when everything goes down, and gold could go down, it could come down, but it's not going to come down like everything else, if it even does it this time. Gold can go on a super cycle here in the next months and years and not come back. So if we sell out on this silver special, maybe Joe on the Half Empty Cup of Joe, maybe he'll dig up a little gold special on the Half Empty Cup of Joe. You guys can switch over and listen there.
Yeah, we'll try to do that. It's just, man, right now, as an example, $5 Liberties, $5 Indians, back to call on the wholesalers, which means they don't have it. What they're saying is, call us if you have any, because we don't. Right? So, again, this is just how things work. And we've seen this before. When gold, gets in rally mode, it doesn't let you in, right? It just keeps going and keeps going and keeps going. Keep buying. One line open. I don't know where we're at. If we still got a few. I think we may still have a few. Get them in. Get them while you can. Jason and I, we're going to be right back with the Half Empty Cup.